Well, let's move on. Fortis Healthcare reported what was a good operational performance in Q4. The margins improved both sequentially and annually, led by stable hospital and improved diagnostic margins. Our colleague Vinnii Motiwala spoke to Dr. Ashutosh Raghuvanshi, who's the MD and CEO of the company, and began by asking him about the margin outlook for FY26. Listen in.
We have stated in past that we would see almost a 1.5% to 2% year-on-year improvement in margin, and we have delivered on that. I think that trend will continue. It's coming on basis of a lot of factors, essentially, which are driving this progress.
Okay. And what are these factors, and how much more improvement can we expect in terms of margins now in FY26?
So there are many factors. One of them is, of course, occupancy, which has been steadily improving. So last quarter, we had about 69% occupancy levels. We expect this to go above 70% in the coming year. And that is one of the drivers. But the case mix is another driver. A lot of our hospitals have been equipped with robotic services, and we have done large number of robotic cases. So that area has been growing. Oncology has been growing steadily as well, where the ARPOPs are typically higher. Our bone marrow transplant units have been doing very well. The hematology service is one of the largest in the country. And at the same time, we also are adding brownfield capacity. As you might be aware that some of that, about 800 beds, which are supposed to come during this year, some of them will come in early part, and some of the beds will come towards the end of the year. But early on within this quarter, we will see some beds getting added in Noida and Faridabad. That will also give us a further flip to our profitability.
Okay, further improvement with all these factors in terms of profitability. Mr. Raghuvanshi, you spoke about ARPOPs also. We were talking about occupancies. Both these have actually started seeing an improvement. I have seen an improvement actually in the quarter. How much did key segments, I want to know, like surgical revenue and complex cases actually contribute in this quarter? Was there a significant increase on that front?
Yes, so our surgical cases is approximately about 60%, and 40% comes from medical patients. So that has been a big contribution. And as I said, complex surgeries have been happening more, and that has contributed to bring this number.
Okay. Mr. Raghuvanshi, one more point you highlighted was in terms of robotics side. You just touched upon it, but I want to know robotics. That was up by 72% when I look at it in FY25. And neurosciences, that also is up significantly, 17% YOY. Could you give us a sense in terms of how much did they contribute in the quarter in terms of revenues, EBITDAs? What is the outlook for this in FY26 as well?
Yeah, so neurosciences has been going steadily, and that is on basis of the new equipment we have done. We have got a gamma knife, which is a precision therapy, and that has done very well. We have got other radiation oncology facilities also, which are very specific for neurosciences. So that has contributed. But all these segments have been growing. But the fastest growing segment for us has been oncology, where we have seen about 21 to 22% CAGR over the last couple of years. And that trend seems to continue. Earlier on, our cardiac sciences formed the largest segment, which still does, but the oncology is catching up fast, and so are the other specialties. Robotics, especially as you asked, a couple of our units we have got 2 Da Vinci robots, and many of our other units have got 1. And the numbers have been growing very fast over there. There are a lot of advantages in robotic surgeries, and that's why many patients are opting for these procedures.
Sir, what I also want to know is in terms of occupancy as well as ARPOP. Now, overall also, occupancy for FY25, I'm looking at the full year, that's at 69%. ARPOP, 2.42 crores. Manesar Hospital, that has also done well, right? We're picking up traction in that front, operating at 38% occupancy. That's very interesting. So for FY26, overall, What are we expecting in both these numbers? Occupancy, what will that be? And what is the ARPOP that we're looking at?
So yes, I'm expecting about 72% occupancy at a network level. Manesar facility is a new facility, as you know, and we are currently operating only 90 beds. But month on month, the occupancy numbers are going up, and we expect those numbers. We expect to add another 120 beds within this year, and also close the year by at least about 50% occupancy in Manesar specifically. But overall, at the network level, we expect it to be about 72%. ARPOP has steadily been growing quarter on quarter for last many quarters, and I think that trend will continue. However, that will be slightly moderated as we go further because of multiple factors, primarily the capacity enhancement. And for that capacity enhancement, we would also be accepting probably more scheme business than what we do at the moment. And that might moderate the ARPOP a little bit. But ARPOP growth has been very significant over the last, I would say, about 8 to 10 quarters, and that trend will continue.
Okay. Sir, a question just in terms of diagnostic front, right? Because the growth has just been 3%, though margins have seen a very good improvement. I want to understand, the scenario that is playing out here. What is the outlook also that comes in from the diagnostic front of the business?
Yes, our diagnostic business certainly has underperformed compared to the industry peers. There have been multiple reasons. One of the major ones was our change of brand, which we did about 1.5 years back. That impact is now gradually weaned off, and now we are seeing a steady growth happening. And that's the reason why the growth numbers are so low. Our profitability this year has increased compared to the last year. And that trend will continue. This year focus is to build this business further and improve the profitability profile as well. We are very hopeful that this business will do well for the simple reason that we have a lot of focus on genomics and other specialized tests. At the same time, we are strengthening our retail network of patient touch points. We have almost increased about 800 touch points in the last year. So that will improve our lab economics per lab as well, and that give us an upside on the lab business. Our objective is that in this year, we want to achieve industry level of growth, both on the top line as well as have the similar margin profile.
So that is going to be almost around, we could expect at least double-digit growth, right? High single-digit to double-digit growth is what we could watch out for?
Absolutely.
And margin profile, you said, will improve further, right? Because there's so much lab economics is going to be improving. So right now, around that 18% mark, how many more basis point improvement could one see in FY26 here?
We expect to go to at least about 21%.
Okay, that's going to be interesting, 21%. So that's something that we're watching out for as well. So, in terms of international revenue, I just want to touch up on that point, international patient revenue that's there. Contributing to around 8% of your total contribution, 17% increase YOY. What are we watching out for in terms of a guidance there? Any bit of a worry coming in there, or you expect this to see an increase coming in, given the current scenario that we're seeing in terms of geopolitics?
Yeah, in the current scenario, we are a little cautious about how much growth we are going to see here. But we are pretty certain that the numbers are going to remain steady. So we may not see the same level of growth, about 17% growth we saw from last year to this year. That level may come down to maybe 10, 12%, but we will certainly see a growth in international patients. There were many events which sort of reduced the numbers of international patients coming to India, especially from Bangladesh. And now with the current situation, there is also a hesitation from other places. But so far, we have not seen any numbers going down, and we are seeing a steady number of patients coming.
Okay, all right. So that is Fortis Healthcare talking about what they are expecting in terms of improvement of margins. 1.5% to 2% improvement in terms of margins is what they're looking at. The stock is up around 1%. They've seen a huge rise in terms of robotic surgery this quarter gone by.